Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in the upper part of yesterday's range, and heading into the open, the buy side is more dominant and in control. That being said, the market is trading near all-time highs, so in order for us to continue heading higher and put in a breakout type move, we are going to have to see broad market strength, participation in the upside move from the other markets, and some sustained and persistent upside momentum. If that situation is present in real time and Nasdaq is actually pushing to a new all-time high and the Russell is not showing any weakness and also pushing to higher prices, then given the recent strength in the market and the entire recovery of the breakdown attempt from last week, we could be looking at a move to a fresh all-time high. So on the upside, we have resistance at 0.2 half to 0.4 half, which is the all-time high in the S&P, and it is resistance until broken. But if we are seeing those signs of strength in real time, then the market could be setting up for a push to a fresh all-time high, and beyond 24.04 half, there is no hard resistance. So the zone that we have at 10 to 12 is simply based on range expectation. It's not actually a hard area of resistance. So beyond 0.4 half, it's really just going to depend on how much volume we're seeing on the day time frame and the type of range that the market can put in on the day time frame. In the event of a failure at yesterday's high of 99.5 or at the initial resistance zone, on the downside we have the aggressive area of support at 94 to 96, and buyers can maintain short-term control above 94 to 96. A break below 94 to 96 would be the first sign of some weakness coming into the market, and then that would bring yesterday's low of 92 into play and a push down into the 85 to 88 initial support. Now at initial support, we have to assess the situation in real time and determine if there is sufficient reward to risk to justify going long. And if the market is quite exhausted into that zone, it can still provide a reaction and buy side can step in. It is valid support until broken, but again, it is going to depend on how the market approaches it, the level of weakness we're seeing across the board, and that's going to help us figure out whether it is still worthwhile to go long at 84 to 88. Below that, we have the 83 half high volume node, and then the next area of support where responsive buyers can step in is 75 quarter to 78 quarter, and that's a pretty high odds area for buyers to be active. So heading into the open, we still have to maintain a fairly flexible and nimble intraday bias simply because the market is trading near the all-time highs, and we just have to see whether we are seeing those bullish signs in real time to support a move to a new all-time high. If that's the case, then we can give the edge to the buy side, given that the buy side is more dominant right now. But if off the open we are not seeing any signs of strength, or if we actually start seeing signs of intraday weakness, then it means we need to be cautious on the long side, and there may even be a short setup available to us at that point in time. So those are the main ideas. Heading into the open, let's see if the buy side can hold ES above 94 to 96. That's going to help establish our intraday bias, and we'll take it from there.